Kerry Packer, the $750 million deal. In 1987, Kerry Packer did something that shocked the business world, and he sold his most valuable asset, his TV network, for over $1 billion. His friends thought he'd lost his mind, his competitors celebrated, his employees worried. How could he sell the crown jewel of his empire? But Packer saw something nobody else saw. He saw the market was at a peak. He saw debt was exploding. He saw his buyer, Alan Bond, was over-leveraged and headed for disaster. So he made a bet. He sold at the top, walked away with over $1 billion in cash, and waited. 3 years later, when Bond's empire collapsed and the network went on the liquidation block, Packer walked back in. And he bought his own network back for $250 million. Same network, $750 million cheaper, 3 years of patience. This is the story of the boldest market timing play in history, and the 3 lessons about having the courage to sell when everyone's buying, and the discipline to buy when everyone's panicking. To understand this deal, you need to understand 2 men and 1 extraordinary moment in time. Australia, mid-1980s. The economy was booming, the stock market was soaring, entrepreneurs were building empires on borrowed money. Credit was cheap, optimism was everywhere, and 2 men stood at the centre of it all. Kerry Packer, the son of Sir Frank Packer, who built the original media empire. Kerry inherited a strong business, but he'd made it stronger, more dominant. By 1987, he controlled the Nine network, the most powerful television station in Australia. It wasn't just profitable, it was a money printing machine. 60% of the national TV advertising market, prime-time dominance in every category: news, sports, entertainment. The Nine network was the crown jewel of Australian media, earning over $100 million a year in profit. And then there was Alan Bond, the other side of this story, the man who would make Kerry Packer $750 million richer. Alan Bond was everything Kerry Packer wasn't. Self-made, charismatic, flamboyant, aggressive. A former sign painter from England who'd immigrated to Australia as a teenager with nothing. Through sheer audacity and ambition, he'd built himself into one of Australia's richest men. He'd made his fortune in property development, then expanded into brewing, buying Swan Brewery, and then he'd won the America's Cup in 1983, bringing the trophy to Australia for the first time in 132 years. Suddenly, Alan Bond wasn't just a businessman, he was a national hero, a symbol of Australian ambition. But Alan Bond had a fundamental problem. He was addicted to leverage, addicted to debt, addicted to growth at any cost. By 1987, Bond's empire included brewing, property, mining, television, and telecommunications. He was building, acquiring, expanding constantly, and he was doing it all with borrowed money, mountains of borrowed money. But in mid-1987, Bond didn't look vulnerable. He looked unstoppable. He'd just paid $53 million for Van Gogh's painting irises, setting a world auction record. He was splashing his wealth everywhere, and he wanted one more jewel for his crown. The Nine network. Kerry Packer sat in his office in Sydney and looked at the numbers. The Nine network was his heritage. His father had built the foundation. Kerry had grown it into something extraordinary. It was printing money. By every traditional measure, this was an asset you never sell. This was the kind of business you hold forever and pass to your children. But Packer saw something in the numbers that bothered him deeply. The Australian economy was overheating. Corporate debt had reached record levels. The stock market was reaching valuations that made no sense. Property prices in Sydney and Melbourne were insane. Everywhere he looked, debt, leverage, optimism disconnected from reality. And everywhere he looked, he saw entrepreneurs like Alan Bond leveraging themselves to the absolute hilt, borrowing against tomorrow to expand today, betting that the boom would last forever. Packer had seen booms before. He'd seen cycles. He understood markets. And everything he saw told him this cycle was about to turn. The boom was going to become a bust. And when it did, the most leveraged players would be the first to fall. Alan Bond was the most leveraged player of them all. So when Bond's representatives approached Packer about buying the Nine network, Packer didn't immediately dismiss it. He listened. He was curious. And when Bond started talking about price, Packer did something brilliant, something that revealed his deep understanding of human psychology. He didn't negotiate down, he negotiated up. Bond's team offered $800 million, a staggering amount for a television network in a market the size of Australia. Most sellers would have jumped at that number. Packer countered with $1 billion. Bond's team came back at $900 million. Packer held firm at $1 billion. Everyone around Packer thought he was sabotaging the deal. Why would you price yourself out of a sale? Why would you ask for more than the market will bear? But Packer understood something profound about ego. He understood that men like Alan Bond, men who'd built empires on confidence and audacity, men who'd just paid record prices for art and yachts and trophies, those men couldn't walk away from a record-setting deal. They had to be the one who paid the highest price. They had to be the one who won. Their identity demanded it. And Bond couldn't help himself. In June 1987, after weeks of negotiation, he agreed 1.05 billion Australian dollars. The largest media transaction in Australian history, a price so high it shocked the industry. Kerry Packer had just sold his TV network for more than anyone thought possible, more than the network was worth by any rational analysis. He'd sold it at the absolute peak of the market to someone he knew, couldn't afford it long term. The day the deal closed, people came up to Packer everywhere. They told him he'd made a mistake. The Nine network was worth keeping. It was a strategic asset. It was family legacy. It was irreplaceable. Packer smiled politely, shook hands, thanked them for their concern, and walked away with over $1 billion in cash. 4 months later, October 19th, 1987, Black Monday, the stock market crashed. The Dow Jones Industrial Average fell 22% in a single day, the largest single-day percentage decline in history. The Australian stock market followed, actually fell harder. The debt-fueled boom that had powered the entire 1980s came to a screaming, violent halt. Suddenly, all those leveraged empires that had looked invincible started looking vulnerable, very vulnerable. Interest rates spiked as central banks tried to stabilise the system. Banks that had been happy to lend money for any project suddenly got cautious, started calling loans, started demanding additional collateral, and the entrepreneurs who'd borrowed billions to build their kingdoms started scrambling, selling assets, restructuring debt, trying desperately to survive. Alan Bond was in serious trouble. His entire empire was built on debt, layer upon layer of debt. And now that debt was crushing him. The Nine network was still profitable. It was still generating over 100 million a year. But it wasn't nearly profitable enough to service the debt Bond had taken on to buy it. He was bleeding cash every month, but the Nine network wasn't his only problem. His other businesses were collapsing too. His property developments were stuck. Nobody was buying. His brewing company was facing intense competition and losing money. His mining operations were hit by falling commodity prices. Everything was going wrong at once, and the debt was still there, growing larger every month as interest accrued. Packer watched from the sidelines. He read the reports. He heard the rumours. He saw Bond scrambling, and he waited. 1988 passed. Bond struggled. He sold some assets to raise cash. He restructured some debt with his banks. He cut costs. He fired people, but he couldn't save the empire. There was too much leverage, too little cash flow, too many creditors. 1989 arrived. Bond's situation got worse, much worse. His other businesses were collapsing. His property empire was underwater, worth less than the debt against it. The banks were circling, demanding more collateral, threatening to call loans. And the Nine network, the trophy asset he'd bought for prestige and power and $1 billion, had become an anchor, dragging him down into bankruptcy. Alan Bond's empire collapsed, completely and utterly collapsed. He defaulted on hundreds of millions of dollars in debt. His companies went into receivership. His assets went up for sale. Banks and creditors fighting over the scraps. Everything he'd built over decades disappeared in a cascade of failed loans and margin calls. and the Nine network went on the liquidation block. The receivers needed cash immediately. They couldn't wait for market conditions to improve. They had creditors demanding payment. They needed to sell fast. Kerry Packer was watching. He'd been watching the entire time, patiently, calmly, waiting for exactly this moment. He stepped forward, made an offer. $250 million. The receivers looked at the number, looked at the desperate state of the market, looked at the complete absence of other buyers, and they accepted. Kerry Packer had just bought back his own network, the same employees, the same shows, the same market dominance, for less than a quarter of what he'd sold it for 3 years earlier. Same asset, 3 years apart, $750 million in profit. When reporters asked Packer about the deal, when they asked him how he'd pulled off the greatest market timing play in Australian business history, he gave them a quote that would define his reputation forever. "You only get one Allen bond in your lifetime, and I got mine." It wasn't cruel, it wasn't gloating, it was just a statement of fact. Once in your lifetime, if you're very lucky, you find someone willing to pay an absurd price at the peak of a market bubble. Someone so over-leveraged and overconfident that they'll pay anything to win. Someone whose ego is bigger than their balance sheet. And if you're smart, if you understand cycles and timing and human nature, you sell to them. You take their money, every dollar of it, and you wait. You wait for the inevitable crash, for the inevitable collapse, for the moment when that same asset comes back on the market at a fraction of the price. That's exactly what Packer did. He found his Allen bond. He sold at the irrational price. He waited through the crash with cash in hand, and he bought back what he'd sold for pennies on the dollar. Perfect execution, perfect timing, perfect discipline. Lesson 1. Sell at the peak, even if it's your most valuable asset. The first lesson from this deal is about emotional detachment, about separating your identity from your assets, about making rational decisions even when emotion is pulling you in the other direction. Kerry Packer loved the Nine network. It was his father's legacy. It was his power base in Australian society. It was his identity in many ways. But when he saw the market at a peak, when he saw an irrational buyer willing to pay an irrational price, when he saw an opportunity to sell for far more than the asset was worth, he didn't let emotion stop him from making the rational decision. He sold. This is incredibly hard to do. Most investors, even sophisticated ones, can't sell their winners. They fall in love with their positions. They tie their identity to their assets. They hold through peaks because selling feels like giving up, like admitting you were lucky. But great investors understand that assets are just assets. They're not your identity, they're not your legacy, they're tools, instruments, things you use to build wealth. And when someone offers you significantly more than what a tool is worth, you sell it every single time. No hesitation, no emotion, you just sell. Packer knew the Nine network was worth maybe $500 or $600 million in a normal market, maybe $700 million in a good market with a strategic buyer. But Bond was offering over $1 billion. That wasn't a business valuation. That wasn't based on cash flows or market analysis. That was ego. That was bubble mentality. So Packer sold. He took the $1 billion. And he didn't look back, didn't second guess, didn't worry about regret. Here's what most people don't understand about selling at peaks. You don't need to time it perfectly. You don't need to sell at the exact top tick. You just need to sell when prices have clearly disconnected from fundamentals, when valuations are based on optimism and momentum rather than reality and cash flow. In 1987, the Nine network was earning about $100 million a year in profit. Bond paid over $1 billion for it. That's more than 10 times earnings for a mature media business in a small market. By any rational metric, that was way too high. Packer didn't need a crystal ball to know that was too expensive. He just needed to understand value. And when someone offers you twice what something's worth based on fundamentals, you sell. Even if it's your most valuable asset, even if you love it, even if people think you're crazy for letting it go. Because here's the truth that most people miss. You can always buy it back. If it's really that valuable, if it really is strategic, if you really do need it for your business, you can buy it back later, usually for less, sometimes for a lot less. And that's exactly what Packer did. Lesson 2, cash is king during crashes. The second lesson is about positioning, about understanding that wealth isn't just about what you own, it's about what you can deploy when opportunities appear. When Packer sold the Nine network in 1987, he didn't immediately reinvest that $1 billion into other assets. He didn't buy more property. He didn't acquire other businesses. He didn't jump into the stock market. He held cash, a lot of cash, over $1 billion sitting in bank accounts and short-term instruments, earning almost nothing, waiting. And when the crash came in October 1987, when asset prices collapsed, when over-leveraged empires started falling, Packer had what nobody else had: liquidity, cash, buying power. This is the principle that separates wealthy people from truly wealthy people. Wealthy people own assets. They have net worth. They can show you a balance sheet with impressive numbers. Truly wealthy people own assets and maintain significant cash reserves for opportunities. They sacrifice some return. They accept that cash doesn't grow. They tolerate the psychological discomfort of sitting on idle capital. Because they understand that when markets crash, when recessions hit, when crises unfold, assets go on sale. Real assets, good assets, assets that would never be available at reasonable prices in normal times. But those assets only go on sale if you have cash to buy them. If all your wealth is tied up in existing positions, if you're fully invested, you can't take advantage of crashes. You just suffer through them with everyone else. Packer positioned himself perfectly. He sold at the peak. He held cash. So when the crash came, he wasn't scrambling to sell assets in a panic. He wasn't watching his net worth evaporate. He was calmly watching opportunities appear everywhere. And he had the capital to seize them. Think about what that $1 billion in cash gave him. First, complete safety. No matter how bad things got, Packer wasn't vulnerable. He wasn't leveraged. He wasn't facing any financial pressure at all. He could sleep perfectly at night while everyone else was panicking. Second, complete optionality. With $1 billion in cash, Packer could buy literally anything that became cheap enough. Real estate, businesses, stocks, whatever the market offered at fire sale prices. And third, complete power. When everyone else is desperate for cash, when everyone else is selling to meet the debt obligations, the person with cash is king. They can dictate terms, they can be patient, they can buy assets for pennies on the dollar. That's exactly what happened with the Nine network. The receivers managing Bond's bankruptcy needed cash immediately. They didn't have time to wait for market recovery. They needed someone who could close quickly with cash. Packer could. For $250 million instead of the $1 billion Bond had paid. This principle applies at every level of wealth. Whether you have $1,000 or $1 billion, maintaining cash reserves for opportunities is absolutely crucial. It's psychologically uncomfortable. Cash doesn't grow. It often doesn't even keep up with inflation. It feels like you're missing out when markets are rising. But when markets crash, when opportunities appear, having cash is the difference between watching from the sidelines and building generational wealth. Lesson 3, patience plus liquidity equals massive returns. The third lesson is about patience, about understanding that great opportunities take time to develop, that you can't force timing. Packer sold the Nine network in mid-1987. He bought it back in 1990. 3 years of waiting, 3 years of watching, 3 years of resisting the temptation to jump back in too early. That patience was absolutely critical to the entire strategy. Most investors can't wait. They sell high, which is good, but then they buy back too soon. They see prices drop 20% and think it's a bargain. They deploy cash too early, and when the real bottom comes, they're already fully invested. Packer didn't make that mistake. He sold in 1987 and watched the crash unfold that October. But Bond's empire didn't collapse immediately. It took time. The debt took time to become truly unsustainable. The creditors took time to lose patience. Packer waded through all of it. 3 full years of sitting on cash while people questioned his judgment. 3 years of patience. And in 1990, when Bond's empire finally collapsed, when the Nine network came back on the market, Packer was ready. He knew exactly what he wanted and exactly what he'd pay. $250 million. Take it or leave it. They took it. This combination of patience and liquidity is what creates generational wealth. It's not enough to sell high. You have to wait for the real bottom. You have to resist deploying capital too early. You have to say no to good opportunities so you can say yes to great opportunities. Packer said no to reinvesting in 1987, 1988 and 1989. He waited for the one opportunity he really wanted at the price he was willing to pay. That's the power of patience combined with liquidity. How this applies to you. You might think, I don't have a $1 billion TV network. How does this apply to me? Let me tell you exactly how. First, the principle of selling winners at extreme valuations applies to everything. Stocks, real estate, businesses. Whatever assets you own, there will be times when prices disconnect from fundamentals. When that happens, sell. Don't get emotional. Take profits. Move to cash. Second, maintain cash reserves always. Keep 10-20% in cash because opportunities don't appear when you're ready. They appear when markets crash. When people panic, you're not keeping cash to earn returns. You're keeping cash to have power, to be able to act when everyone else is frozen. Third, develop patience. This is the hardest part. Wait for the right opportunity at the right price. That's where the real money is made. Don't chase. Don't buy just to be invested. Wait for opportunities that are obviously good. So good you'd be stupid not to take them. Kerry Packer bought back the Nine network in 1990 for $250 million. He ran it for another 15 years. When he died in 2005, his estate was worth $6.5 billion. Alan Bond never recovered. He went to prison for fraud in 1997, lost everything, died in 2015, his legacy tied to his empire's collapse. Two men, same market, one understood cycles, timing, discipline. The other understood ambition, leverage, ego. One made $750 million, the other lost everything. The difference was understanding when to sell, when to wait. That cash is power during crashes. Kerry Packer understood. Alan Bond didn't. And that understanding was worth $750 million. So here's my question for you. Do you have the courage to sell winners when prices get irrational? The discipline to hold cash when everyone's invested? The patience to wait for real opportunities? Those three qualities separate great investors from everyone else. The market will give you opportunities, booms that push prices too high, crashes that push prices too low. The question is, will you be positioned? Will you have cash, patience, courage? Kerry Packer was, and he made $750 million. The cycle is always turning. Are you waiting for your Alan Bond?